From alternative mutual funds to high-yield bonds, we're searching for ways to winterize your portfolio. We've got a panel of all-stars now from the Schwab Investing Conference in Boston to share their best ideas. To our guests at the Schwab Investing Conference out in Boston, we're going to talk to Rick Lake this morning. He's co-chairman of Lake Partners. Also Tom LaPointe, portfolio manager of the Third Avenue Credit Institutional and Credit Investor Funds. Also Thomas Meyer, of course, is the CEO and chairman of Meyer Capital Group and Wealth Management. Gentlemen, thanks so much for being here, and thanks so much for your patience there as we got that oil data to our audience this morning. Thomas, let me begin with you. What's your strategy these days when it comes to investing?
Well, when we launched the Focus Credit Fund, the Third Avenue Focus Credit Fund, we really saw an opportunity to give clients income, but also look at the alternative space of distressed debt, high-yield bonds, loans, and debt for equity restructuring. So we're really offering a product that goes up and down the capital structure, gives you income, but gives you the upside of a distressed investment that generally has been usually only available to alternative investments and 2 and 20 funds. So we've raised $1 billion so far. It's been open for a year, and we see some value up and down the capital structure.
Right. Tom, how do you, Tom LaPointe, just to make his clear, we have a Thomas and a Tom. Tom, where do you see things right now?
What we're trying to do with our clients' portfolios is reduce the risk in their portfolios while still and remaining 100% invested. Our goal is to get 30 to 50% less risk than the overall market, and we just feel that the environment is quite conducive to having these type of portfolios because, quite frankly, individual investors do not have any appetite for risk at this time.
Rick, when you say alternative investing in mutual funds, you know, the average person might say, okay, alternative investing, what's that, real estate, timber, whatever it is, but what are you buying, a real estate fund? I mean, are there mutual funds that really do alternative investing? How would you explain that to a regular person?
Well, there's a very simple explanation. When we talk about alternatives, we're actually talking about alternative strategies, similar to hedge funds, but with investor protection. So we look for short selling, we look for hedging, and we look for maybe unusual assets like distressed debt or commodities.
So, okay, let me just play devil's advocate here. Why would you do that for a mutual fund where you don't get paid the 2 and 20?
Well, you do it for a mutual fund because it's a great thing to do for investors. And as a growing business, volume is very large. And as we've learned from a lot of retailers, a big volume can be very profitable. So many investment professionals from the hedge fund and alternative side of the business are bringing a new array of vehicles to the individual investor. It's really almost a golden era for alternative strategies and mutual funds.
Tom LaPointe, let me ask you, you focus in on high yield. A lot of people say high yield has been sort of the belle of the ball for the past year. People looking for alternatives, they may look where returns were historically, and they may look at high yield, but should I be worried that that is a bubble and it's about to burst?
Listen, of all the fixed income assets out there, I wouldn't touch 90% of them. They trade between 1.5% and 3.5%. That's trillions and trillions of dollars, maybe $14 trillion. Clients are looking for income-producing assets. There's only one place you can get that. That's high-yield bonds, bank debt, distressed investments, and hybrid preferreds. Really, that's a sweet spot of where a Third Avenue Focus Credit Fund is really launched. And the alternative really is condemning your clients to 2% returns for the next 10 years. I don't know about you, but that's not going to pay for a Harvard education. It's not going to pay for your retirement. It's not paying for your health care. I don't know how you can do that. So I think really people are migrating to that, and that's why we've really launched this fund.
And Thomas Meyer, let's talk about some of your recommendations this morning. Can we go through a few? Market Field,
Sure.
one of them?
Market Field is a long-short manager. He has the ability to go up to 50% short in the portfolio. At the present rate, he's probably around 20% short, 80% long. He's been, since in existence, he's up about 25% when the market's down 20. The whole idea here is you're getting that upside potential with downside protection.
All right, thanks so much to all three of you. We appreciate your taking the time.